My name is Kaseem. Welcome to my channel. I really hope you've been enjoying all the videos that you've been getting so far from me, and I hope you're learning something and you're sticking around. I want you to stick around and watch my progress. And subscribe. Subscribe. Let's talk. Subscribe. Well, yeah. In today's video, we are going to look at the portfolio. Just to go over the portfolio, we're going to touch on the activity sections today. We're going to look at how the activities that have been going on for the past week. We're also going to touch on the craziness that has been going on with the stock market. We're going to touch on that. We're going to touch on unemployment, what our unemployment has been looking what our unemployment has been looking like lately. We're going to touch on the Federal Reserve, what they've been doing. We're going to touch on all the economic stimulus program that the government are putting out. We're going to touch on that. We're also going to touch on the PPP program. Hopping over to the activity, I filtered this by the week. There's the date of the week, and I also filtered it by the dividend. These are some of the earnings that the portfolio has generated this week. I literally do not have to do anything to get this. You might look at this like this is small. Yes, it's very, very small. But getting paid passively without really doing anything or making any effort, just by buying companies and holding them for the long term, and you're getting paid over time, this will grow. This will grow, and I'm going to be sharing it with you. So stick around, subscribe. I'm going to be sharing everything about this portfolio. I'm treating this portfolio like a public company, right? Showing people how you can invest. And at the same time, I absolutely love M1. I love this this broker. I really love the way they have everything set up. They just automate everything for you. It's really great. I really love it. If you look at the trade section, so the first one that I just showed you was the dividend section. If you look at the trade section, I'm gonna just look at only that. I sold some Wells Fargo, but that's just a different story. So I deposited I'm depositing roughly like $200 a week right now. Hopefully I can get that one day. The goal is to get this up to like $10,000-$20,000 on a weekly basis. So I got to start from somewhere. So I'm starting now. I'm excited about sharing this with you. I don't know if you can hear my voice, but yeah, I'm treating this portfolio like a public company. I'm going to show everything and show you what's possible when it comes to investing. So $100 came in on the 6th, and the $100 was divided into all these different companies. It bought up all these different companies. So $102 was invested. Bought Target, Nike, Merck, Coca-Cola, Disney, Visa, and the money was just split up by M1. M1 split up the money, and he buys all these different companies, right? And I remember, these are companies. These are just not a paper asset. Technically, it's a paper asset, but these are companies out there producing commerce. You probably have their stuff. Probably have Amex paying them 18% in interest. Well, I'm buying Amex, and they're going to be paying me some of that 18% that you're paying them in interest. So I'm trying to show you how you can be on the other side of this trading business. You don't want to be the one that is paying this bank's interest and not getting anything back, right? So I'm buying these companies, I'm buying their shares, I'm an owner of them. I own this company, and they're going to be paying interest, they're going to be paying dividend, and this is how the money is split up, right? So the first trade was Target and all this thing. So that was I think on Wednesday, and then on Friday, which is today, another 100 went in. And same thing. M1 just does it in the background seamlessly. We purchased Microsoft, Vanguard, Home Depot. So it bought up all these different companies, and the way that the system buys this company is by the division, the allocation, the asset allocation that I just showed you. So if we pop back into the slides, the slices, right? Each slice has its own asset allocation. So 80% of the total money that comes into the portfolio will go into this passive income section. 10% will also go into Berkshire Hathaway section. 2% will go into global value. 2% will go into global growth, and 2% will go into ultra aggressive slice right here. If you're going into ultra aggressive, for example, you can see this is the total amount of money that is in there. This is how much dividend has been earned. The portfolio still needs to catch up by this amount of money, and as you can see, the total 2% that comes in, right? That money is also split, right? It's split into different sections, and it's split into 30% goes into this fund, 29%, 13%. So this is asset allocation, right? The money that is coming in is allocated to each pie is allocated to each pie. A certain percentage will go into each pie. So that's how M1, the broker M1, this is how they're able to determine how much go into which pie. If I go back to the main portfolio here and we look at 1 month, for example, so far this month, $400 has gone into the portfolio, and the way the money, this $400 gets split up, it gets split up between all this allocation, right? 84% will go into here, 10% will go here, and then you get the gist. That's how that works. All the links to this setup will be in the description. The links to get yourself set up with M1 if you're interested. Not financial advice. Please do research. Don't sue me, bro. If you click the link below, if you want to view the exact portfolio, my exact portfolio that I'm showing you, you can use this link right here, which is this one. It will show you my exact portfolio. This is updated every single time I post a video. This is updated, so click the link. Yeah, and when you click the link, it will pop up. It will show something like this. You would see my complete holding, the total amount of companies and ETFs that I own, the dividend yield. So this is the temperature of how much money I'm getting paid, basically. Yeah, this is basically the percentage of the amount of money that I'm getting paid based on the total amount of money I have in there. So on a yearly basis. And this is the expense ratio. This is how much it costs me to maintain this portfolio. And this is the target allocation for each of this, like I said earlier on. So please use the link. You can check you can check this out. You look at all my holdings. Take your time to look at that. On the other note, we have a situation like this where the economy is basically in shambles right now because of the coronavirus. This was around 2008 recession time. You can see the amount of job loss that we had. We basically didn't. I mean, it was bad at that time, but you really not noticing it. But look at right now with this whole situation with the virus. Look at that. We lost 20 million, over 20 million jobs that are basically gone, right? Because these jobs are not gonna pop back in the next 2 months. A lot of these people, they're probably not gonna get their job back anytime soon. So that's like pretty much gone. Maybe over 3, 4, 5 years, this would end up coming back. So this is a really bad news. On a normal case and on a normal basis, this kind of a news would just tank the market. But right now, the reality is the economy and the stock market are not in sync right now. They are not working together. They are not correlate. They are not working together at all. Here's an evidence of that. They are just not working together. Look, right here we have a situation whereby the stock market is like up, and there's over 20 million Americans unemployed. Over 20 million Americans are unemployed, and we have a situation whereby almost all the big companies in the United States, they're all up. They're all up today. We're seeing greens. We're seeing green in every single industry: technology, communication, finance, health, home improvements, consumer goods, energy. I mean, you just name the industry, it's up. The truth of the matter is, the stock market, if you think about the stock market, and let me try to explain it to you in the best way that I possibly can. The stock market and the economy, they're supposed to be working together. They're supposed to work together, but sometimes they just don't work together whatsoever. We have a situation like this that over 20 million people are they've lost their job, and the stock market rallied for the day, right? Well, you can think of the stock market as a dog, and you can think of the economy as the person walking the dog, right? If you have a situation whereby the person walking the dog is not doing very well, right? As you can see, with the economy is not doing well. The person walking the dog is basically in coma right now, and the stock market is going wild, it's going crazy, right? Well, how do I look at this situation, and how do you profit from it? Because with every single thing that happens in the world, there's always an opportunity. You know, during tsunamis or any bad thing that happened in the world, there's always an opportunity. How do you profit from that? You profit from that by having a very well diversified portfolio like this. Very well diversified portfolio where you don't put all your eggs into one basket. You don't put all your eggs into one industry. You put you put your money into multiple industries, multiple asset classes, and you put different amount in different companies, and you just hope over time they would grow over time. Because what is the stock market? The stock market in the short term is a casino. It's a casino where people go and people buy stocks, people sell stocks, people speculate over the short term. But the long term, if you invest in companies that are doing well, companies that are earning money from the economy, companies that you know, because with all the stuff that is going on right now, Jeff Bezos just increased his net worth by over 30 or 40 billion dollars, right? With all the stuff that is going on. So over a long term, we as just a regular folks, we can benefit from the economy as well by having a portfolio like this, right? And if we look at this numbers really quickly here, we have a situation. Let me go to my monthly view. Like I said on my previous video, I like to focus on the monthly view, the weekly views, right? Monthly views for me and the weekly view are more important. And in general, I just like to see what's going on with my portfolio over time. And this is the default setting with M1. When you log in, this is what you get. But if I go to the monthly view, my two main focus is this right here: cash flow that goes into the portfolio. How can I increase the amount of money that I'm putting in here on a monthly basis, and on a yearly basis, right? Because the amount of money that I can feed in here has a direct correlation to how much I earn from the economy. And what is the economy? The economy right here. The economy is basically the economy consists of just companies out there doing business, doing commerce, and some of these companies, they earn a ton of money. Microsoft is worth over $1 trillion. Apple is worth over $1 trillion. Facebook is getting there. Google is getting there. Disney is getting there. Verizon, Berkshire Hathaway, all these companies, they out there conducting commerce, still making money, no matter what really goes on in the economy, right? So if you can pick and choose which ones you want to invest in and look at the numbers and all those things, you can basically make more wiser decisions on more wiser decisions with your money, and hopefully that would generate you great income over time. And that's exactly what I'm trying to do with this portfolio right here, right? That's exactly what I'm trying to do with this portfolio. If we pop right in here, right, look at Berkshire Hathaway. Today, the monthly view has recovered from I think the past quarter was down, or it was down the past quarter. It was down a lot. I think it was down like 25%, and now it's gone up It's gone up 4%, which is really good. And as you see, these companies, we know them, we use their stuff, you know. Apple, Bank of America, Coca-Cola, we know that, we know them, we use their stuff. This, what's going on with the economy right now is temporary. It's temporary. Just stay focused, feed money into the into your investments. The most important thing to do right now is to just clear out debt. If you have a lot of debt, you have a lot of credit card bills, pay those stuff off first. Those stuff, you get rid of those. Those are evil. Evil. Get rid of the evils in your life, which is just the credit cards. Get rid of those, get rid of debt. And so once you can get rid of debt, then you have the spare cash to be able to start feeding into your portfolio and be able to start earning dividend money passively from all this great American companies. Me personally, I'm a big believer in America. America is going to get through this, and I'm going to keep on, no matter what happened with the dog, which is the economy, like the analogy that I was using. No matter what happened with the economy, these companies are still going to be in business. They're going to be doing their thing. We're going to get through this rough patch, and the economy will be just fine. So during rough times, the best thing that you can do, like I've been saying, is to protect yourself by diversifying your money. Don't put your money into one company, one industry. You have to spread it around. You know, you put a little bit into real estate, into bonds, utilities, tech, consumer, finance. You just spread your money around because you don't know which company is gonna do what. And over time, it's just better if you're thinking about the long term, 10 years from now, 15 years from now. Over time, it's just better to just have very, very solid companies that you can put your money into. I always look at the tech sector for my example a lot, but you know, you have all these companies that they're still out there. They're not going anywhere. You know, they're not going anywhere. They're still going to be paying the dividend. They're going to be paying us, the shareholder, right? So get started, get invested. This is great. This is great. All you just have to do, like I said, you just feed the base, put money in, and get the check. Put money in and get the check. No matter how little, I appreciate the fact that you have to start from somewhere, and these are companies that are now paying you now, instead of you know, just buying stuff from those companies. Now they're paying you. So in future episode, I will be doing like a more in-depth deep dive into all these different pies. I will be doing more in-depth videos on them, on each and every single one of them. Like if I click right here now, you have all this different ETFs. I will be explaining why I put money in them, why I'm using them, using ETFs and individual equity together. I will be doing a lot of videos on those. So please subscribe, stick around for all the videos to come in the future. The stock market it's possibly going up. The stock market is going up as well. Is that the Federal Reserve, they just keep buying, they keep printing money and keep buying government debt, right? So as long as this balance sheet keeps going up, which is our country's central bank. This is the Federal Reserve. That's the central bank of the United States. You know, different countries have their own central bank. If you look at the money that you have, it says Federal Reserve notes. So as long as they keep printing money and buying debt, the stock market will keep on going up. The other thing that is also propping up the market is all the checks that we all been expecting and we all waiting for, and hopefully we all get. But there's a ton of stories in them. Keep up with the stories. So just Google a stimulus check on that, and then we have loans that are built to help small businesses, which are like the PPP loans. So all this factor basically is helping the stock market. The big part of all this is the Federal Reserve. The Federal Reserve says that we should not worry about anything right now. They are going to be printing money. They're going to be printing money, and most likely this will probably still keep on going up. I don't see this plateauing anytime soon. So as long as they're printing money, that's the Federal Reserve's balance sheet is over 6 trillion. So as long as they keep printing money and sending it to everybody and buying everything, the market is going to keep on going up. And as long as the market is going to keep on going up, I'm going to be dollar cost averaging into the market, putting little money into the market every single week. And over a long term, you collect interest, you collect dividend, and that's how you grow your wealth. Most people, like Warren Buffett, which is one of my favorite investor, most of his money was made in the stock market. Most of his money was made in the stock market during his history of investing. He gets cash flow from his company, which is the insurance company. He has a lot of insurance company. One being Geico. Geico is owned by Warren Buffett. He gets cash flow from that, and then based on the cash flow, he use that money to put into the stock market or buy other businesses outright. So that's basically what I'm trying to do as well. With my cash flow that I earn after I pay my basic expenses and all these things and basic bills, I just focus on putting that money to work right into the market. Like I said, I focus on putting that money into the market. I'm gonna keep working on bringing this amount up, and I'll be looking forward to collecting those dividends in the future. And yeah, thank you very much for watching this video. Please subscribe. I need these videos to be viewed by other people. Share it on your social media. I love the fact that I'm starting this portfolio right now, that I'm being a little bit more focused on it, because it's opportunity. I really do believe that this is gonna be an opportunity to like enjoy the growth that the market is still gonna provide. The market is gonna go up and down for the next year. I understand that. That's my understanding. I fully understand that. We could see another drop like this. The second wave could happen. All this stuff can happen. There's a lot of things that can happen. But I'm committed to putting cash flow in this every single week and collecting the dividend over time. Right? That's my commitment, and I'm going to share that with you on every single step of the way. So thank you. Subscribe, and I will see you on the next episode.